regardless of what you do, Mr. Kiyosaki said, invest your excess cash in real estate. Another guru is Dolph DeRose. Is actually Robert Kiyosaki's guru for properties. He also said the rich either made their wealth or kept big portion of their wealth in real estate. Now let's see why both of them see in properties. What is properties? What are the upside, the benefits of properties? The first one is property is scarce. If you look at it in Jalan Bukit Bintang today, from the Menara Sing down until the shop Bormas, the old Bormas, the Hotel Emerald, every square inch is owned by somebody. So if you want to purchase a unit or a lot or land there, you have to make an offer. And most of them are probably fully paid if they don't refinance it. Right? It's also passed on to the children. Those are like perpetual ATMs already. Okay? So will there be a second Bukit Bintang? A second level Bukit Bintang? May not be, right? So, the next one, a best hedge against hyperinflation. I have a friend, in 1968, he actually bought a landed property in PJ. That time it costing about 80,000 ringgit. Shortly, 3 years later, 1971, he sold it for 240,000. How many fold increase? 3 times, eh? Today, what do you think is the market value? Today is 4 million. So if you have kept it then and refinance it today, you still have the asset and the cash flow, right? You still right on the upside. So without doing much, through inflation, the price of property appreciated. It's a fantastic leverage for properties. Some of you may have retirement programs with your companies. The company said, no, if you put $1 down, the company will match $1 for you for your retirement. Some companies say, okay, you put $1 down, I match for you $2. But the banks is wonderful, where we as property investor, we put $1 down, the bank is our partner, put $9. So it's fantastic leverage. No other type of financial instrument will give you this type of leverage. Fourthly, add value. You can actually add value to a particular property as opposed to other types of investment. For example, stocks. You know, if you are invested in KFC, no matter how much KFC you consume or your family consume, you wouldn't move the share price of KFC. But by putting in an additional room, by painting your property, the value is already appreciated, right? Some people, investor, they actually look at the house, they say, wow, so rotten looking, very dirty and all that. But by putting the paint already, more inquiries will come, right? You see suddenly a bright, shiny, new property. The next is business money making machine. Now today is the 4th of April. Some of you may receive SMS, you know. We have bank in. Can you please check your account? Isn't that a nice SMS? Wonderful, right? Some of you may receive a few SMS. Some of you may receive a lot of SMS. It's the decision you make couple years ago to acquire the property and become a knowledgeable landlord. Then you receive the benefits, right? So once you set it up nicely, the money will come in, you know. On a monthly basis, the SMS will come in, right? Now, what is the downside of properties? The first one is very illiquid. If you look at it, property, you cannot like stock market. You sell the shares, after 3 days, you can actually take back the money, you know. But towards property investor, we are not so worried because we have a ready buyer. Who do you think is a ready buyer? The banks, exactly. We can refinance with the bank, right? And we can take out an overdraft facility. That is turning your illiquid asset into accessible cash. The next downside is liability if it's not rented out. You know, some properties you have apartment, condos that you pay maintenance fee. Even though you don't rent out the property, is a very heavy burden. You got to cough up the maintenance fee. So whatever properties that you have today is not rented out, try not to go for the market price, try to reduce. Recently we have lunch with one of our friends. He said, hey, my tenant is the store in Johor Bahru. He said, they have been asking me to reduce the rent. Last time I can rent out at 21,000 a month. Now they ask me to reduce to 11,000. I also rent out. Because if I don't rent out, at this period, who is going to rent for me? Then every month I got to pay to the bank. Myself stay with the tenant. In his case, it's rather drastic, about 50% reduction. But as a property investor, you want to look at it as a business. Okay? So rent out whatever excess property you have now, get some cash flow, rather than just let it sitting idle and hoping for the market rental, right? Goals of investing. Some of you are looking to invest for cash flow. For some is capital appreciation. Some is both. For myself, I'm actually a cash flow investor, so I look for cash flow in a property I invest. Now, investment strategies during recessionary times. First thing you have to ask is sustainability. Is your portfolio sustainable throughout the good and the bad times? If you look at the chart today, the cash flow and the time, you see there's a up and down. When it's rented, you get a cash flow. When it's not rented, it comes down. If you have a few of this type of properties, sometimes at night cannot sleep, Especially sometimes, you rented out to expat. Now they ask for rent reduction. Expat also less. A lot of people are trying to fight against one another to rent out the property, right? Or do you prefer your property, the cash flow slowly increase over time, doesn't have a very large fluctuation, Then your portfolio is more stable, slowly moving up, inching up slowly, right? More stable. Positive cash flow. Every property that I look at it as setting up a new business. It's like 7-Eleven, when you set up the 7-Eleven, does it make money, when you are in operation? If you are not making money in operation, better close down the store.